Hello, Gotham. Welcome to Snapfingers TV. Gotham is from Polynomial protocols, and today is very happy to talk with him and to learn more about your protocols and things. So, hi, Gotham.
Hi, I'm very happy to be here. Glad to share.
Hello, Gotham. The first question for this, we know the decentralized derivatives is really hard recently. Many protocols get funded by very big VC. So what do you think about this sector, and what's your plan in this round?
When you look at the traditional market, right, derivatives is a huge chunk of it. And if you look at crypto in general at the moment, perpetual futures are really doing very well. Like if you look at DYDX or PERP, and they are like comparable to centralized exchanges now. And historically, if you look back, options in general did take a lot of time, even in the traditional market. And this is mostly due to two things. One of them being options are very complicated in general. And secondly, like liquidity in options is very low. So in DeFi, it will take a bit of time for options to catch up. And this is where like Polynomial comes in, right? Our goal is to make the markets more efficient and liquid for options so that options get more traded in DeFi in general. So in the beginning, we were planning to build our own option protocol. And then we looked at and when you look at DeFi in general at the moment, there are currently a lot of option protocols. This just fragments the liquidity a lot. So in traditional market, right, you have a single issuing options, which is kind of efficient, but here we have around 10 protocols having their own options on ETH. So it's very hard for getting the best prices because it's very illiquid in general, and there is fragmentation around it. So that is how our first product comes in place, which is to aggregate the options from multiple protocols and bring them into a single place. And you can think of it as 1 inch for options, but there is some differences in the way it is being built. But in general, in short, you can say that if an option has the same experience strike price, Polynomial treats it as a single thing and it's aggregated into a single place. And what this means is that for the user, if he wants, he can just go to Polynomial and buy an option. And under the hood, everything else is taken care of. He doesn't have to go to 5-10 different sites and see the prices and all these things. And if there are any price differences between multiple option protocols, Polynomial allows arbitrage opportunities for people, and that also makes the market more efficient. And since our main goal is to bring more liquidity, we also plan to bring structured products into the market, which will enable users to earn yield on ETH and other assets that they have in a passive way, or various strategies based on the market outlook they have.
Yeah, cool. Can you give us a brief introduction about your team? Why you start from these products or something? About your team.
Okay. We all have been friends from college. Back in the day, we all went to different paths. I did some research in crypto, in blockchain in general. And then I went into machine learning, which is a completely different paradigm. And I was there. Other Salman, he's a part-time trader and he worked at a startup called Techion. And then Mubaris was there and he used to work at Citibank in their software side on the margin trading team. And then he used to work at InstaDapp, and where he helped build the V2 and governance. So we were all part-time, whatever free time we had, we were on crypto, we were exploring DeFi, and we wanted to build stuff. And I have built a lot of side projects on my free time, and all of us are very interested in building new things, and we always building a problem that we have. And one thing that we wanted was our crypto is so volatile, and we wanted to hedge it, because you don't want to go wrecked just because the market went down. And we were okay, let's go into it. And we wanted to buy option, and there was nothing good at that time on chain. And there was centralized alternative, there is Deribit, but it's KYC, so many procedures. We are from India, so it's very hard to do the KYC and all those things. So it just takes a lot of time, and we were irritated by it. So we were okay, let's solve this problem. This is something we want to do. Let's make it an option trading platform. And then we looked into it. It's very hard to build an AMM for options, because it's more like when you are having an AMM, right? Like you have, let's say Uniswap position, you keep ETH and let's say USDC. So you have the impermanent loss when it goes, but the option, right? There is a very high chance the option has zero value, right? Like if it expires out of the money, which will happen a lot of time, you will end up having just the option with you in the pool. So building an AMM for option in general is really hard. So what we thought of was like, we came up with like a way of trading option, and we went into hack money by ETH Global, and we were lucky to be finalists at that time, and we came up with a way to trade options. But like after building the protocol, this is a different way of trading option, but it is like one in like 10 protocols right now, and it's just like not the core problem at the moment. The core problem is that there is very less liquidity for option, and it's being fragmented and it's going everywhere. There are like 10 protocols and all. So that's why like we came up with this way of like, let's aggregate the option, bring them into a single place so that the market is more efficient and all those things.
Yeah, thank you. We all know liquidity is one of the most important things for DeFi. What's the ecosystem in Polynomial? And so we can bring more liquidity at the same time. We give some reward or something. How does that work? How can we bring more liquidity to this protocol?
Yeah, so there are like two types of users, right? One are users who understand options. So for them, what we are providing is a single place to trade option, right? They don't have to go to multiple places. It's like kind of like how OneInch or Matcha or Paraswap is. You can just buy it from a single place. We take care of all the complexities. It's a bit more different than trading ERC20 because under the hood it's a bit more difficult, but that is like for the normal trader. And for a passive income, like a person who doesn't understand the complexities of the option protocols, what he can do is put liquidity in structured products. And what we will do is like, we will, let's say you deposit ETH, and one strategy can be like selling covered calls. So every week we'll sell covered calls, and users can earn income on top of it, which can be relatively higher than what you can get in Aave or other lending platforms, which can be a very good way for people to earn income passively. And that is like one of the two ways of solving, we are like tackling the market.
So the next question is, we know some of the derivatives products are made for professional guys, and what's the main user target for Polynomial? And what's our plan to bring them on board into these protocols? Yeah.
I mean, in DeFi, there are like very few professional traders per se. So like we plan to bringing a lot of users using the structured products, and slowly and make them like, into the understand the basics of option. And then, you using the option, you can do anything, right? Like you can do like, oh, I think it's going to, like, rather than just like, I think it's going to go up or it's going to go down, you can also bet like, I think the market will do something, can be up or down, and make money on this. And like bringing like all these things slowly to the users. So we plan on like bringing structured products, bring to the retail, and then slowly educate the people onto like trading options, so that like they can explore the strategies by themselves, which would be a much better way, because if they just directly go to option, there is a high chance they will lose all the money. So we want to like slowly educate the users and bring options more common into the DeFi users' life.
So the next question that is, we know that derivatives is price sensitive. So when the market is dropped very heavily or something, we can see the liquidation volume exceed 10 or 100 million dollars. Mm-hmm. So how will you solve the problems of liquidity and the impermanent loss?
Let's look at it this way. One of the biggest use case of options in general is to hedge. And you can use it to hedge your portfolio. This can be like, you can use various strategies, and you can use it to hedge against divergence loss or impermanent loss or any of these things. And this makes options one of the most interesting financial products currently that are there. And the thing is like, people rarely understand how to use them. That's like the only issue that is there. But like you can use options in various ways. Now in DeFi, like very few people use these options to hedge their portfolio. Like if you have a very long position, like hedge it properly so that you don't get completely wrecked. One of the main reasons where is a very less amount of users is that the prices are not comparable to centralized alternatives. We think that when Polynomial comes and with our sufficient liquidity that we provide through our structured products and our aggregation protocol, people can easily trade options and use these options for making sure their portfolio is properly hedged and make sure not everybody loses all the money because there is some fake news or something and then the market is all down.
Yeah, so next question is, there's a protocol named Reborn based on RPN. They turn their products to be an easier product, something to lower the user barrier. So Polynomial is based on RPN and UMA. So why you choose these two protocols, and what's the difference between build this by your own?
Okay, so one of the core differences is that we are an aggregator of options. So we will aggregate more protocols as we go. And currently we stand with UMA and Open. But as we speak, we are writing more and more option protocols and integrating as much as we can. We are looking into integrations with Premia, Pods, Lyra, Dopex, all the protocols that are there, we plan to integrate them, but it will take a bit of time. And one of the main reasons why we started with Open and UMA is that Open currently has one of the largest volumes in option space, and UMA is the first option protocol we integrated with, and they are also pretty big, right? So that's why we started out like that, but we hope to add more protocols in the future, and this makes sure that different protocols are there, and it's what it ensures is that Polynomial becomes a single hub and everything else is taken care of by the user. And we will also have structured products, but in our structured products, rather than just have an open, in the case of Ribbon, we will have structured products based on different option protocols, right? If there is Open and UMA, we will be selling covered calls using both Open and UMA, and probably 4 to 5 other protocols at the same time, so that everything else is more distributed in a very better way based on the prices in the market.
Yeah, thank you, Gotham. So can you briefly tell us about the roadmap of the Polynomial? What's now, and when can we use this on maybe layer 2 something, or what's the blockchain you are choosing?
So we are currently live on testnet, and we have been for I think less than a month now, and we plan to go mainnet somewhere in the first quarter of next year. We are thinking of launching first on layer 2s. It's a different approach than how it used to be, where people used to go on mainnet and contemplate on going on L2s, but currently gas is quite high and it's not favorable for an option trader in general compared to other things. So we're going probably with Arbitrum, and then expanding into Optimism and mainnet as we go more further into the procedure. That's what we are planning, and yeah, that's essentially the gist of it. Everything else is still a mysterious thing, so we need to see how it goes. I mean, when we launch, we will also have structured products, which is not there in our testnet currently, but we will want to make sure users can earn yield also. So that will also be added, and then we will go live, hopefully few months.
Yeah, some of users in our community will want to know if they participate in the testnet or be early adopters, will they get some reward or something here in Polynomial? Can you share some information about this?
I don't know, we don't have any token planned at the moment. I mean, launching a token is quite difficult. Hope to get product market fit first, because after that only it makes sense to have a proper token, and we want to make sure we have product market fit. And I don't know, let's see how it goes, but we don't have anything planned at the moment.
Sure, it's okay. And the next question is, can you share about some partners with Polynomial at the moment, and what's the content about the collaborations with them?
You mean other option protocols, or
yeah, maybe Utrade something,
venture capitalists? We did raise a 1.1 million pre-seed very recently. Our lead for the round was Ashigan from Acrylic, and we also have Cabelaros Capital and Genblock Capital as other VC partners. We do also have like a bunch of angels who are like helping us a lot, and some of them are like Lito Cohen from Crypto Testers, Paul from Panthera Capital, Siddharth Jain, who is like the founder of Hubble, Soumya Jain, who is the founder of Instadap, and then we have Richard Mann Donho from Quantstamp. These are like some of the people who joined us in our pre-seed, and yeah, like that's it's like a very different group of people, like all of them having some parts in all of it.
Yeah, cool.